WWE stock is surging right now with the announcement of Vince McMahon returning to the company. The stock price has gone up by 22%, $16 from its previous close, as we can see here. But this company has been doing a lot of things right. From their last 4 quarters, they have actually beat their earnings set by 17 cents, 14 cents. Like, they have done extremely well over the last year. And this is a major entertainment business. So what we're going to do today, folks, we're going to find the intrinsic value of this company. We're going to figure out what they're doing right, what they're doing wrong, as I said, by using the stock spec software. So this company is getting a score of 7 out of 10 on the financial valuation. So they are a financially strong company. They are only getting docked in 3 categories. One of those categories is their price to earnings ratio on a 5-year average being 52.92. Ideally, we like to find companies that have a price to earnings ratio of 22.5 and lower, because that means you're not paying so much of a premium for those earnings. Now, in a comparison, if you bring it over to the company metrics category, which compares their trailing 12 months to the 5-year averages, their price to earnings ratio right now is currently at 29.68. Close to that 22.5 margin that we're looking for, but not quite there yet. But that's way more attractive than the 52.92 that we're currently being shown. The other thing is their current ratio sitting at 1.46. Now, this isn't the worst current ratio. Ideally, we want to find any current ratio that's over 1. However, the software likes companies that have a current ratio of 1.5 and higher. That indicates to us that they have enough assets on hand to cover those liabilities, and that 0.5 buffer zone is just an added margin of safety, something to consider as we head into recessions. And this is something I repeat in a lot of my videos. Now, one thing that is really troubling me about this company is their debt to equity ratio. It's currently sitting at 105.18%. That means they're heavily leveraged in debt and not through equity. We want to find companies that have a debt to equity of 50% or lower. That means that they're leveraging equity within the business and not taking on debt. So they're using a lot of debt to funnel the operations of the company. Let's go into the things that they are doing right, which is a lot. The return on equity is high. The amount of return that they're bringing towards their shareholders, 30%. Phenomenal. Their EPS growth is up by 132%. That's great. And as I said earlier, their share dilution is down by 44% over the last 5 years. So they've been buying back shares, probably because this company's stock price is potentially cheap. It hit a low of 47. So they probably were scooping up shares all along in 2021, 2022. Yeah, it's hovering around that point in the $40 range, low, early 50s. Their net income is up. Their free cash flow is up. Return on invested capital is high at 25%, and the revenue growth is up 8% over the last 5 years. Not bad, fairly low number. Their financial strengths are pretty great. It's pretty strong. They do pay out a dividend. So if you are investing into this company or looking to get into this company for the dividend, they do pay out a small dividend of 0.55% yield, and that turns out to be $36 million being paid out in the dividend. And their average free cash flow comes out to be $142 million, so they can easily cover the dividend, no problem. So that is secure, which is something we want to see. So overall thoughts, I think WWE is a fairly strong company. However, me being a value investor, I want to find what the intrinsic value is before I even take a further look at this company to say if it's worth a buy or not. So we're going to use the price analysis section. If you are enjoying the video so far, folks, hit that like button and subscribe button. It means a lot to me, it means a lot to the channel. So what I've done here, folks, I filled out these boxes, and what these boxes are 3 different assumptions that I want to make based off a 10-year analysis. I could do 1 to 20 years of what I believe WWE as a company will do over the next 10 years. I'm going to hit calculate with a desired return of 13% using conservative numbers based off of what they've shown here historically. So I'm using historic past numbers to try to gauge and guesstimate where this company might be, and it'll spit out a number what we should be paying for this company today. But I do think, okay, what do we got? Current price $88.46. Average calculation comes out to be $75. Very interesting, because that was the price that it was pretty much yesterday. Thursday, January 5th, it was $72, pretty much trading at fair value. And now we're currently looking at a $75 average price calculation. You may agree with the aggressive average being at $95, and if that's the case, that's including a 9% revenue growth over the next 10 years with a profit margin of 12%, free cash flow margin of 13%. These are all relatively conservative numbers if you think about it going forward. So it really might be here. However, the value investor that I am, I like finding companies that are really between the conservative average and moderate average. The $74 price range looks a lot more attractive to me than than what it currently is right now at $88. However, it was there. It was there. Yesterday it was literally $71, and for the last month it was just been coming down to a pretty much bottom of 67, 62, around there. So at one point it was in that undervalued territory based off these calculations here. So what are my closing thoughts on WWE? I think it's a solid entertainment business. I think I have to monitor this company further, see what happens with Vince McMahon, and see where he goes in that regard and how he leads the company. But granted, I'm not a huge wrestling fan. If you are a wrestling fan or know someone that's a huge wrestling fan, this might be the company to take a further look into. I can only just judge it by the numbers, and to me, the numbers look good. However, one of the main things is this company in your circle of competence? To me, it's a little bit outside my circle of competence because I don't really watch wrestling. That's just plain and simple. However, if you needed some verification to say if the numbers look good and you were kind of on the fence, use this software as a tool. Follow the links in the description box below if you want to get your hands on the software and use it for yourself. But the numbers look good. From my perspective, the numbers look good. I just want this company stock price to come down to that $74, $75 range, and it might be a buy. But anyways, folks, that's the video. I will see you in the next one. Thank you so much for watching.